Hello, everyone, and welcome into crushthestreet.com. Shocking news this morning as I record this interview here. A record 3.3 million Americans just filed for unemployment benefits. That was a number that was much higher than what was expected. Things are turning on a dime here with the coronavirus and the reaction that the economy is having, and of course the fallout from that. And that's what I really want to talk about today, is the fallout from this. Are we seeing a turnaround here? I know there's a lot of funny money getting thrown at the system at the moment. Markets seem to like that. It's uncertain out there. Markets are up big today. They were up big yesterday. But are we through this yet? And that's what we'll discuss today. We'll talk about the markets. We'll even bring up oil, precious metals with our next guest. His name is Jerry Robinson. He called the 2008 financial crisis. And in fact, just recently, prior to the fallout that we've seen in stocks here, they went 100% to cash. He called it for his students at his website at followthemoney.com. He told everyone to go 100% to cash in this moment. And my goodness, what a call that was in light of what we've seen. So Jerry Robinson is an economist, a veteran trend trader, serial entrepreneur, best-selling author, and the founder of followthemoney.com. Robinson is also the best-selling author of the book, Bankruptcy of Our Nation, Your Financial Survival Guide. Jerry, thanks for coming on Crush the Street with me once again.
Oh, thank you so much. I appreciate it. That was a very nice introduction. Let me just make one little slight edit to your introduction, is that we went to cash early, but we didn't suggest that everyone should go to cash. We basically provide a look over your shoulder kind of service to our members and to our students. So we would never advise them what to do with their money, because we're not advisors, but they were alerted that we were going to cash, and many of them did as well, and are very happy to be sitting in cash right now.
Absolutely. That was a good distinction, right? None of us are financial advisors.
No.
We're just all expressing our opinions here
Correct.
on these platforms. So thanks for clarifying that. Jerry, in November 2018, that was the last time we did an interview like this. And markets were reacting at the time to tighter monetary policy. In 2018, there was a 20% correction in stocks. And it was exposure to the real fragility the markets were having. And here we are in this moment with the coronavirus being the pin that's popping this bubble. And this is much more significant than obviously what we saw in 2018. Let's not ignore that stocks have lost trillions of dollars. So I want to put it out there as a question. I mean, have we seen a correction that you would say is done? Are we bottoming out here, or is there more pain to come?
Well, I should stress that we use a technical and fundamental combination approach whenever we decide what to do with our own money. And we decided to go to cash in February for a few reasons. One of the reasons being the way that we saw President Trump kind of talking on the TV. I mean, I saw one of his press conferences and was aghast. And I said, okay, this is a bigger problem than perhaps they're letting on. Because here in America, we were pretty much in a bubble from the rest of the world. And much of our media, wasn't talking too much about coronavirus. And the stock market was not really reacting to coronavirus. It was, in fact, continuing to go up. And so we tend to ignore the news. We tend to ignore the noise. And we look at the charts. But you also have to pay attention to some fundamental things as well. Even when you're trying to determine those tops and bottoms. Nobody can call a top. Nobody can call a bottom. One of the best traders who ever lived, an old investor, Bernard Baruch, said anybody who says they can is a liar. Nobody calls the top, nobody calls the bottom, but you can certainly protect yourself, and capital preservation has its place. And that's what we were, pointing to when we left the market earlier in the year. Now, when I look at the S&P 500, for example, I have a chart of the S&P 500 here. It bottomed out at around 2180. And I use the word bottomed because that's the latest bottom. That's the most recent bottom, 2180. It's back up now to about 25.92 as I speak. So we've certainly had a nice rally off of the recent bottom. Now, is that the bottom? Is 2180 the bottom? That's a question that we are going to find out in the near term, I would assume. Maybe because what this rally has mainly been due to, Kenneth, is the stimulus, the hopes of stimulus. The problem is that the stimulus is not enough. They're pumping in $2 trillion, and it's not going to be enough. This is a problem that's going to be on the magnitude of maybe $5 to $10 trillion. This is enormous. And the ultimate fallout of this, we don't know what the long-term impact is going to be. I mean, for example, I was just out doing some things yesterday. I had to leave my own property, which I've been pretty much, kind of been on lockdown myself in this whole process, trying to follow the CDC's guidelines and all of this. But I had to go out of my house yesterday, had to meet some people who were working on another property that I have. And I was surprised that some of the people who came to my house to this property to work on it, some of them wanted to shake my hand and others didn't want to be anywhere near me. And I was very surprised at the mixed response. And I have a feeling that part of this mixed response is probably due to political persuasion. I'm not really sure. So I don't know how long the memory of the American people is going to be. We tend to have a short memory. I mean, back in 2003, for example, Kenneth, we remember the shock and awe and all the bombs dropping on Iraq by the United States. We all knew we were at war back in 2003 with Iraq. We were still at war with Iraq in 2005, but nobody really cared. We were still at war in Iraq in 2012, but nobody really cared. And so Americans kind of have a memory that's interesting. They will remember things whenever the propaganda is loud, and then they'll forget things when the propaganda level goes down. I don't know if the propaganda level around this topic is going to go down until the 2020 election. This is an election year. And so it makes all of these things that we looked at the charts, we look at what's going on. We don't know how this is going to be perceived, how long the memory is going to stay in Americans' minds. Are they going to continue to be afraid to go into restaurants to eat? Or are they going to now prefer takeout and food delivery? Are these trends that we're seeing, are they real trends? Or are they short-term trends created by the current propaganda? That we will find out. I think if you want to make money in this environment, the answer that you have to come up with is how short is the memory of the American people. I think that's the answer.
That's a powerful point. And one of the things I've been saying here is this will be a 9/11 moment to a certain degree. Obviously, the markets have responded that way. Governments have responded that way. We've never seen anything like this where the whole world shuts down. I mean, Italy shut down, and then essentially the whole world has gone on lockdown. Nobody's leaving their house, and only quote unquote essential workers. So I definitely would agree with that. I read a statistic that 90% of air traffic is down, is gone. I mean, only 10% of what was flying 2 months ago is flying now, which is a complete collapse. So I'm curious to see how long this will play out for and how much of an impact the stimulus is going to have. Now, initially, the government, the Fed would implement some sort of change, and the markets were just falling right through that, right? That emergency rate cut, 1,000-point drop the next day, right? I mean, it was just ongoing pushing on a string, but it seems like there's some sort of, okay, it's almost like Americans are starting to get bored with this. And I think the trigger is going to be what happens in the ICUs. If we start seeing a massive spike in our ICUs, people getting infected and large numbers of people dying, which would be much greater than the typical flu, I think that's going to escalate things to the next level. I personally have, up until now, known no one that has been infected with COVID-19. And I just found out that a distant acquaintance has the virus, and he is the only person I know. He's in intensive care. He's at the ICU at the moment. So for me, in my small world, this is the one person I know that has this. is in the ICU. So if this ramps up, I think we could definitely see some further shakeouts in the markets because people are not going to want to spend. And when you don't have the velocity of money circling the economy, that's going to be very problematic for stocks going forward here. And I'll pass it back to you.
Yeah, it's difficult to say that we think the bottom is in here. I mean, again, we just saw this morning as we do this recording on the 26th of March, we just saw, and I think you alluded to it, 3.3 trillion million or 3.3 million Americans unemployed. That, of course, is just record breaking. I mean, that's record breaking unemployment or employment levels. I mean, this is difficult for us to process. I think what you're saying is that it's almost like we're detached from reality now. Now we're living in a strange time. Remember, just prior to this crash, I think it's important to stress that most Americans were told by the White House that we were living in the greatest economy ever, and that we had the best healthcare system in the world. Both of those illusions are now being shattered before our very eyes as the United States now becomes increasingly the epicenter of the coronavirus pandemic. And so with all of these newly and unemployed people, with the trillions that are going to have to be spent to dig ourselves out of the hole, that doesn't even begin to scratch the surface when we consider that we're already the world's greatest debtor nation, Kenneth. I mean, before we took on all this new debt that we're doing now, we were already the world's greatest debtor nation.
In good times.
In all of world history. So to take on all of these new trillions of dollars, you've caught me at an interesting time because I'm really trying to discover price here, and I'm finding it to be very difficult because on one hand, you can build the case that if the Fed pumps in trillions of dollars, the stock market could literally become the paradise of the rich, which it has been for a long time, but even maybe more so because now they can literally just kind of play. It's a playground for them. And when you have all of this money, people say, well, the stock market has to go to zero because of this crisis. Well, in reality, if you pump in a whole bunch of money and then risk appetite rises, that money has to go somewhere. So you might have created even a bigger bubble by what we've done here. I mean, I think another thing to be stated too, Kenneth, is that we have been browbeat by Washington recently about how socialism is the absolute way to destroy your economy. So pray tell me why the only solution to this crisis, not even just one solution, the only solution is to adopt the Bernie Sanders and communist China approach. Isn't it interesting that the United States, the pro-capitalist United States, who wants to shun socialism because it's so deadly to the American economy, finds that socialism and socialism tactics are the only solution to the crisis now? There is no other solution. Is there, Kenneth? Have you heard any free marketers come on television, Kenneth, and say, no, we should let everything fail. We should let everything fail. We shouldn't bail out anybody. Has anybody said that? Have you heard anybody say that?
Not on the
I mean,
mainstream.
anywhere. I mean, I haven't heard a single person even be brave enough to say, I think that everything should fail.
Well,
Because
Doug Casey has, and even David Stockman this week on my channel. But these aren't mainstream people trying
right.
to tickle the ears of the Federal Reserve and the hand that these so many people. And this is what I've learned,
Well,
Jerry.
and these people, by the way, have no power. I mean, they have power over the readers, but they have no power over the
Right.
federal government. So it's easy for them to say what they think should be done. But
Yeah.
in reality, the people who have the power, no one is, I mean, no GOP senator that I can think of who has been free market up until this point, Kenneth, and has beat us over the head about how socialism is the problem. Not a single one voted against bailouts for the airlines. Not a single one voted against bailouts for corporations and bailouts for this long list, and checks for the people after telling us that that was a terrible idea, that we shouldn't send money to individuals. Now it's the only solution, Kenneth. It's the only solution. It's exposed the U.S. capitalist system for the fraud that it is.
Jerry, bad behavior in the economy and business usually gets flushed out naturally because of competition and whatnot. In the system of the global government we have that's all tied in, there's really no competition to the bad economics that you're describing. So, to that extent, because there's really no alternative, can this be artificially sustained and repackaged and just ongoing for the foreseeable future? Or does something eventually have to give? And what gives that transfers from the what the current system is, where does it go to if there really is nothing else?
Well, what I'm suggesting to you is that there was something else just prior to this crash. There was supposedly socialism versus capitalism. This was going to be the 2020 election mantra for the right. They were going to talk about how socialism would destroy the economy. Today, it is their plan to implement socialism to save the economy. So I think the key takeaway here, Kenneth, is the absolute irony that you and I are swimming in here as we see that there really is no other solution proposed by either party, right or left, than simply just to bail out everything that moves. Now, that's not typically the response that goes on for the average individual. You and I, Kenneth, and I don't know about you, but I know many people are told to keep 3 to 6 months liquid savings at all times because you never know. You might end up laid up on the couch. You can't go to work. You may get sick, and you have to be prepared for a financial emergency. And in the event that you run into a 3 to 6 month financial emergency and you can't afford, to pay your bills, there's not a lot of corporations that come rushing out to you to bail you out or give you grants or give you loans. There's not too much that you can do. You're just kind of out of luck because it's free market capitalism, rugged individualism for the individual. However, when the house of the rich is on fire, we see the true colors. We see the real true colors of what this country is composed of. And it's composed of largely a socialism for the rich. Now, where's it all going to go? Likely, right now, we have the 1% telling the 99% that they need to get back to work, right? Because they're losing money. And the 99% may or may not comply with that request. They may go back into the factories. They may go back into the restaurants. They may go back and put themselves at risk. Or they may say, you know what, we're not interested in that. We want to see, further safeguards put in place. And I honestly don't know who's going to win. In the past, the 1% has always won. They strong arm themselves into the victory. But
Yeah.
the 99% now, they have a choice to make. Their 401k has been cut into a 201k. They now have a government that's completely bankrupt, has no plans on how they're going to pay for anything. Remember, we used to hear this, Kenneth, how are we going to pay for stuff? I mean, that is gone. All that's gone. And so the American people now are probably shell-shocked. At least one half of the country should be shell-shocked as to the fact that they have been told that socialism is the problem, and yet socialism has been implemented as the solution. You would expect people to be in the streets, Kenneth. You would expect the Tea Party to be out there saying, hey, lower this national debt. Stop the reckless spending. Where are we going to get the money? You're bankrupting our grandchildren's future. Kenneth, you would expect to see that. You would think in normal, rational, reasonable times, people would come out of their houses or get on their video screens and say, what is happening? But the government is mailing them checks. This is not going to end well, Kenneth. I wrote a book called Bankruptcy of Our Nation. I expect the government to continue to show its true colors as we move forward. But it's bankrupt, and it really has no other choice but to, bail out as much as it possibly can. And of course, the rich are going to bail themselves out more than they're going to bail out the poor. So, not to turn it all into class warfare here, but I think that's really what's happened. I think we've ended up now in a situation where all of this talk about capitalism has been fully exposed for the fraud that it is.
Jerry, and I know it's difficult to flush through these topics completely with any certainty because we don't know what's going to happen tomorrow exactly. But to just discuss this with a little bit more further understanding, with the whole world getting bailed out, does this economic pain paper over renters not being able to pay their rent and now being able to pay their rent, and mortgage those that have mortgages being able to pay their mortgage, and keeping everything together? And if that gets papered over, what is the equal and opposite economic consequence for all this money that's being injected into the system?
Well, I don't think the $2 trillion stimulus bill is going to solve the problem. We're probably going to need to see much more than that in order to restore any semblance of confidence to the system. Now, I don't think that the way we solve this crisis is by pumping in money into the economy. I think the way that we solve this crisis is we recognize that we have a fraudulent economic system, and we let those businesses that have been operating recklessly on the fringe and not preparing by having 3 to 6 months in liquid savings so they can work themselves through an emergency, I would say that they need to fail. I would say that that's what we need to see. We need to see a lot of things flushed in the system. The problem is that there's not enough will in the American people to see that. So we continue to prop up what we have here. I don't think the $2 trillion is enough. I don't think what the Fed has done is going to be enough. I think you're going to see a lot more in the way of bailouts. And I think you make an interesting point too, because, India just locked down for 21 days. That's 1.3 billion people. I mean, that's an enormous economy there that's just going to just shut down and go black for 21 days. Any kind of optimism in this environment is, I would say, probably misplaced, unless it's just near-term speculation, which obviously the stimulus rumor may give way to the selling on the news whenever it finally works its way all the way through. So, if I had to summarize on all of that, I would say that I think it would be probably arrogant to think that we've seen the bottom here, because we really don't think that what has been done is really going to solve much. Secondly, it would also probably be arrogant to think we've seen the bottom here, considering that countries like India and Japan are still on the early side of the curve, on the corona curve, as are the United States and the UK and many other countries. I mean, if you look at the big global corona curve, only China is the one who has kind of made it past the peak and is now still dealing with the fallout of this. But the rest of the countries are going through the curve, and they haven't even hit their peak yet. So by the time all that happens, I think then we can maybe look and see what the damage is. But right now it's awful early, and the Band-Aids that have been put on this economy are going to fail. I mean, they're the wrong prescription, and they're also just they're just going to fail. Just like, I mean, what happened in 2008 is a perfect example. You would think that they would learn from what happened in 2008, but they don't. They just keep using the same. They only have one bullet in the gun.
Sure. And as many governments do, as I am skeptical about many governments, China has lost a lot of credibility with their numbers. So I'm still very hesitant to believe that they have peaked, considering where they were and how things seem to just come to a screeching halt here. And then a lot of news is coming out about their tests being failing, 80% wrong in some cases. So I'll be curious to see what truly happens there over the next few weeks, and then obviously what happens here in the US. But moving on, we're now seeing negative nominal interest rates. The 3-month bond, US bond, is negative, Jerry. Not yield minus inflation, real negative yielding bonds here in the US. Let's talk about precious metals a little bit. Has gold held up to your expectation in this environment, or would you expect more upside in gold here given the current crisis that the economy is currently seeing?
I think gold has done exactly what it's supposed to do in this kind of environment. It's served as insurance. Initially, gold was falling with equities and commodities and everything else, for that matter, currencies. Well, we were dealing with a lot of people raising cash. I mean, many people don't realize how over leveraged the financial markets are. And so when the prices began to come down, margin calls were getting hit, stop losses were being hit. People had to pay Peter to, or rob Peter to pay Paul, kind of thing. And so there was a whole lot of movement, and people had to sell physical gold. I was talking to dealers who people were crying on the phone selling their gold because they had no other money. They had to raise cash and they had to sell their physical gold
Hmm.
because they weren't diversified enough. And so they had to sell the one thing, that made sense in this environment. Well, that was initially. Now we've started to see gold and silver detach and begin to curl back up. We expected to see that after the Federal Reserve launched their unlimited QE. We knew they were going to eventually move there, and we've got it now. And so gold, we've been bullish on gold since we issued a buy signal on it back in early 2019. I think it was February 2019. And we trend trade, and so we'll trade the trend. We're long gold physically, for a long time here, but technically, we do see uptrends and downtrends that occur. The last big uptrend we saw was early in 2019. We called that. It's been running higher. We expected 2020 to be a bigger year for gold, and I still fully expect that to be the case. I would expect to see gold break above $2,000 sooner rather than later in this kind of environment. So I think gold has done well, and I think it's insurance, and that's all it really should be viewed as. It's insurance for your portfolio. It's been around for a long time, and it'll be around for a long time.
Absolutely. Well, and we've seen silver perform well as well. And I would say physical silver. Obviously, we saw the silver spot price get hammered to the $11 range, $12 range. It's moved up
Mhm.
higher since then. But, you talking to the same bullion dealers, you can't get a silver eagle for under $20 an ounce,
Mhm.
even when it was $11 or $12.
It's unreal.
So,
Yeah.
and I'll just add this before I'll let you respond here. Peru, Argentina, Chile, due to the COVID-19 virus, they're shutting mines down. They're not allowing mines to operate, which is impacting basically 25% of the silver market. And, that's not even counting lead, zinc, copper mines, which have silver as a major byproduct. I mean, the silver market seems really undervalued, but it does have that industrial component, which is getting hit right
Mhm.
now. So maybe give us the
Huge.
nuances of
Yeah.
silver in this current environment.
I like gold here. I own silver. I've owned silver for a very long time. I'm long physical silver. I think that silver is there's a huge thesis there. I would say right now, it's silver certainly is on sale for some of the reasons that you brought up. It's certainly on sale when you consider the gold to silver ratio, what, like 120 to 1. I mean, we've never seen anything like this. I mean, this is wild, with silver. We bottomed out at about 1180, and our precious metals advisor, Tom Cloud, actually called that and said 1180 would very likely be the bottom. So far, he's right. It actually has been the bottom so far on silver. We've seen silver rally back up. But again, in this environment, I prefer gold. I like silver, but I prefer gold because, as you mentioned, that industrial component. India is closed. China, as you mentioned, may or may not be out of the woods. I believe that they are probably on the backside of that curve, but who knows? As you point out, neither one of us are there neither one of us have boots on the ground there. We can't confirm any of that. In addition to all of that, you have many other countries that are going to be shutting down. And so this is going to be devastating to industrial demand and thus to silver. And so I would say that this is probably that golden moment for maybe creating a silver portfolio or adding silver to your portfolio or maybe adding to your current position. I like prices here, of course, longer term. But from a perspective of gold or silver right now, I would say I prefer gold in hand if I had to have one.
Good word. Jerry, if people want to learn more about you, followthemoney.com, please let them know a little bit more about where they can go and what they can expect to find.
Well, I don't know how much comfort we've given to people in this interview, and I want to stress that I really believe that the main thrust of this current pandemic that we're in is really not economic. It's physical, and it's emotional, and it's spiritual, and people need help. I mean, I live in a community that is really rural. I moved out of the big city and out into a small area. I have land and all of this, but I have some elderly neighbors, and I've checked on them. Some of them are afraid to go out of their house. Maybe you can run up and take their car up and get them gas. I've offered that. Maybe I can run out when I go to the grocery store to get something for them. Their immune systems are more compromised than mine. And so I would say right now is a great opportunity to be looking for good that we can do for others, and our neighbors, especially those who are vulnerable health-wise, whatever we can do. So I would say that I hope that everybody, has peace in this hour, despite all of the ravaging problems that we have. I would hope that people would have peace right now. And the only way I find that, Kenneth, is through this my spiritual life. And so I hope that people are realizing right now that this is much more than just about money. Of course, it's a big, big thing. Now, if people want to find us, we can help them by educating them on what's going on and helping them understand how we're navigating this current crisis. They can do that at followthemoney.com. And we've been here operating for many years, so well over a decade now. We've been helping people, just like your listeners, understand how to trade trends, how to diversify their income, and how to diversify their investments in a way that's prudent in this hour. So followthemoney.com, and they can find lots of free resources and also our memberships there.
100%. Jerry Robinson, everyone. Jerry, thank you so much for coming on Crush the Street. I look forward to doing a follow-up interview in short order here, and especially as things play out. We're in such pivotal times, and it was great having you on some time ago, talking about this bubble, talking about the problems, and here we are watching things start to play out. So it'll be another timely interview, I'm sure, the next time we have you on. So looking forward to that. You stay safe, and we'll talk very soon.
All right. Thank you, Kenneth. Keep up the good work.